Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 27th of March, 2026. Stocks capitulated overnight as investors have just tired of Trump's fantasy land and just general mistruths. Short of calling them lies. Realistically, we did see him try to manipulate the oil market after the close yet again, like he did like 2 out of the last 3 days. Market's also tired of that as well. It basically dipped 3%, bounced immediately straight back. He said that he extended the Iran deadline, but to 10 days. And then everyone sort of scoffed, basically. And then he started backpedaling and essentially said, "Oh, they asked for 7 days. I'm being generous." But essentially, none of it will end up being true. We've been tracking all the verified comments over the course of the last few days, in particular. But since the conflict started, he is batting at a 20% verified truth rate, which means the other 80% is either unverified, he's the single source, or he's just lied, essentially. So there was an interesting thing this morning from one of the previous rear admirals who was actually in Desert Storm, who was part of a naval ship that escorted tankers through the Strait of Hormuz previously, and he said it's not remotely a realistic solution. It'd be basically you would be allocating a destroyer or a frigate to escort a single boat or a couple of boats, basically, for 2 days, which is just from a cost-effective point of view is absolutely ridiculous. So, the Iranians have, they've actually sort of stepped things up a little bit. Where I think we're at 55 attacks a day previously. And this is Iran plus Iran proxies. They're now up to 58. We've got 2,000 merchant ships stranded stranded at Hormuz. 3,300. There's the death toll. The attacks really haven't stopped from the US side either. They've come off a little bit since he said. So that is one thing that is true. He said he's not going to attack the infrastructure until April the 6th. But for those of you who obviously were, this is just the tariffs all over again. But the reality is that he's affecting everyone else, not just himself this time. So we've had, this was the, ceasefire talks progressing, which we found to be just a complete falsity. Again, after the close, and it got hammered and then sort of bounced back and been sideways. He's attempted this again, extending the deadline at Iran's request, and basically we're back to where we were. And this was the heat map from overnight. Manufacturing, obviously, getting pretty hammered. Oil companies doing fairly well. Tesla probably just drifted off with the index. Meta, which was a bit of a surprising reaction, really. So there was a lawsuit against them where it was only a small amount, but there's someone sued for mental damages or mental health damages around being addicted to social media. They won that case, and that was in the market for about 2 hours yesterday. And didn't really react. I think, in fact, Meta might have been slightly up. But the gravity of that and that precedent that sets now, because Google also was part of that. So they got sued. They were part of the lawsuit as well. But they're now talking that, this sets a dangerous precedent for there to be, thousands and thousands of lawsuits. So, so Meta got really hammered last night. Palantir down 4% as well. We've had a bit of a bounce back in some of the cybersecurity stocks. And some of the software stocks, but essentially they were down 50-odd% prior to this move anyway. It's this part of the market that's the real risk now. Nvidia, is now not benefiting from being the largest constituent in the, in the index. It's actually now, the mindless green robot, when it turns into a panicking red robot, is not necessarily a good thing for those large constituents of the index. And the selling pressure will really hit them. And then these memory chips like Micron, etc., really reeling from this this compression update from Google that basically is going to mean that LLMs are going to require less memory sticks. So we've gone from shortage to potential not shortage in the blink of an eye on a technology upgrade, which is the really hard thing about investing in this thematic is these technology leaps can happen, and you've got to be on the ball basically, because that is hugely significant, and and it could lead to, once people sort of work it out or reverse engineer it, it could lead to other advances as well, and then all of a sudden this memory chip shortage becomes a glut again, and that historically has happened a lot in memory. It is one of the tech industry's biggest boom and bust style sector or subsectors. So we had gold and silver falling away as well. There's reports the Turkish central bank is unloading 11 to 15 billion dollars worth of gold to support their currency. And quash inflation a little bit as well, which is obviously not helping. But look, oil going back up 3 or 4%, and getting back to Brent around 104 and WTI back around 94, 95 at one stage, means that essentially the bonds are yielding a lot more, and we'll likely see some people move back potentially back into treasuries because they can get some yield. There was an interesting interview as well overnight, from one of the bigger commodity houses, and they're basically saying that this could be a rough period, and very few periods in history where gold has actually mirrored the risk assets instead of being an uncorrelated asset. But the interesting point was, on a medium term to long term basis, that correlation will remain intact, and once the speculative money's out of it. And he was also commenting on how small gold is as a market cap sector compared to some of the stock markets and companies, etc. So we've got everything really, every index in strong sell territory, well, except the Nikkei. Again, it does its own thing quite often. But everything's in strong sell on the technicals and the daily, and nearly everything is in strong sell in the technicals on the weekly as well. We're down. We'll be running into our 5th negative week for equities, which hasn't happened. Well, I'd have to go back and check, but it hasn't happened in a very long time. Gold and silver and platinum getting belted again, and that's just that shift back to US dollar and things. And bond yields, etc. Lithium doing pretty well on the week and wasn't down much really on the day. Uranium getting hit. Bitcoin sort of drifting as well, and the Aussie dollar being a risk currency getting hit. So we did get below the 200-day moving average, which you're going to have to really check out on the S&P. That is of concern, and we are trading at the lowest levels since September there, and we're first time we've been below these 2 levels in a while. So look, if you want to get Mosaic, keep up to date. There's a lot of research and a lot of sifting through the the BS to get to what's actually going on. And as I've been saying all week, and being called out on social media platforms about, well, why are stocks rallying? Well, it's because essentially the market was being overly optimistic on what Trump was saying, and going and verifying the facts has obviously been a very good move on our behalf. And if you want to get these updates live, they come to your palm of your hand via notifications or on the desktop, and you can get Mosaic free. The content's free, and if you want the recommendations, it takes costs from there. So anyway, people, you should listen to Bulls versus Bears, our weekly wrap up, to get your head around this week. And myself, Jonathan Takadena, and Kai Chen will be be on the podcast this afternoon. But make sure you like and subscribe for me and follow us on either YouTube, Apple, or Spotify. That really helps us. That really helps us get some followers and things out there. So, have a great weekend, and we will speak again next week.